Bring in Kari Firestone, Executive Chairman and co-founder of Aureus Asset Management, as well as a CNBC contributor. And lucky for us, you actually have a view on the companies individually. But let's just first talk macro. I was a little bit surprised at your estimates for what kind of earnings we are expecting. I mean, without the Magnificent Seven, we'd actually be down for the S&P.
Yeah, I mean, with the Magnificent Seven, estimates for this quarter are down 1%.
Just 1%.
Their earnings are up about 8, -1, but without them, it's -7.5%. So it's a big drop for the rest of the market.
I thought people were looking for, single digits, high single digits year over year for the S&P for this quarter. When did that change, or is this just you?
Well, I think they've been changing over the last month and a half. The last 6 weeks, estimates have been coming down. I think most people would say about flat. I'm surprised that it's up a few percent because, numbers aren't very good. In fact, of the big companies reporting today, if you look to, let's say, the top 10, 6 of them, 5 or 6 will have down earnings for the quarter. It doesn't mean next year they're going to have bad earnings. The market trades for next 12 months or next 18-month type earnings and that outlook. But this is not a great quarter. There's been a lot of softness in the economy. So we're just not expecting a lot. And I don't think the market is really expecting a lot. The market is held in pretty well. It's been resilient this year. But, we're going to see the big numbers next week. But there's still a lot of big companies today.
But you're talking full year down 1%. So you're not even talking about this quarter.
No. Sorry, for this quarter, Joe. For
just this quarter. This quarter. So full year is what?
Quarter over fourth.
Full year is now what?
I think it's sort of flat to up a few percent.
Okay. So that's different then.
We're on the same page.
Okay, good. All right, so let's do some of the individual names. We got the CFO of JNJ coming on. What do you expect there?
Yeah. Well, JNJ has been a strong stock this quarter because, so far this year because people didn't like healthcare last year and they're liking it now. They're hoping to hear something positive about the medtech business coming back. I think, JNJ numbers are not going to be great they're going to be flattish, but they're going to talk, I think, about somewhat better numbers through the whole year as they see hospital visits and discretionary surgeries back. And their pipeline might show a little bit more fruit. I mean, there hasn't been much out of the big pharmas. They've split the company, so Kenvue, which is the consumer side, is been, split off. But I think it'll be as long as he's fairly positive about the whole year 2024, I think the stock will continue to outperform.
How about Proctor Gamble? What cross currents are hitting that company?
Well, Procter & Gamble over the last 2 years has been a poor stock. It's down about 8%. It's underperformed because it had such a big spurt during COVID. Everybody was home and they bought a lot of consumer staples, but they've taken so much price, and now it's hard for them to maintain volumes at those prices. So I think that's what the market wants to hear. Stock's been pretty good this year. Again, numbers will be up. Earnings will be up on fairly small, maybe 3% sales growth, 7-8% earnings growth. So we have to hear about them managing the process of price increases.
Well, we're going to talk Netflix events. That's after the bell. But
yeah.
Do you own Lockheed Martin? Should everybody buy a basket of defense stocks? I mean, we're depleting all of our military equipment. We got 2 wars we're trying to supply, and that, there's other problems on the horizon, I would think.
Yeah, correct. I mean, there's a lot of global tension, geopolitical risk. I mean, Lockheed Martin, we don't own it. We own another defense stock, Booz Allen Hamilton, but it's a name that is expected to have, again, down earnings, but it's really about the future. If orders start to come in better than expected, which we think is very likely for the defense industry, they'll have a better year. Again, the year is not even supposed to be that good, but that can all change because of bookings. It's one of the premier defense contractors and suppliers and producers in the world. And that, to me, makes sense for owning something in the defense sector.
So how about, we got to go, but what about Netflix at this point?
Yeah. Well, Netflix is going to have a very strong quarter. They've won the streaming wars. They can start to look around perhaps at what assets they'd like to acquire from some of the struggling companies. Earnings are supposed to be $222. I think they'll be in that range. That's up 2,500% compared to last year. So it's really about them projecting, I would say, confidence that they can continue to build their revenues, cutting some costs, improving their margins, and maintaining this trajectory they're on, which is, really very strong. But the stock has been strong also. Yeah,
it's been strong. It was a 700, because I remember it. I just, under 200, I just knew, and, we can't do anything here. So, but it was, 700 to 174, back to almost 500.
Correct.
What's out? Johnson & Johnson.
It's like Meta.